Good evening, everyone. Welcome to the Lock in Your Success Trade and Market Update for February 14th, 2014. And happy Valentine's Day, everybody. I'm doing a pre-recorded trade update this week because I'm going to be in New York City taping the M21 series. We're having the workshop next week. I'm really excited. It's going to be a great time. If you haven't signed up to come on down, and I'll put the link in the post. So that said, before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, any trades covered in the update may or may not be live trades. In the event they're computer simulated, we do everything we possibly can to make sure they're as accurately represented as possible. However, actual results may vary. Also, the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And make sure, if you're watching this on YouTube, visit our website, check out our great programs. We'll be adding the M21 to this very, very shortly. It's being recorded next week, so I'm looking forward to that. And if you join our mailing list, make sure you go into the Trading Triangle and trade up and get the free report, 7 Secrets to Becoming a Successful Trader. All right, let's go and check in with our trades. Or before that, why don't we check the market? We were saying last week that if you looked at the weeklies, that the price action in the SPX, the Dow, and the NASDAQ was extremely bullish because we had held our trend lines on a weekly level. We've come down to a weekly level on the Dow, so we penetrated that, but we closed above it and was expecting a good bounce off of that this week. The same scenario for the SPX. And the same scenario for the NASDAQ. So the price movement here was not much of a surprise that we had a very strong up week. One thing that did happen this week is the NASDAQ happened to break out to fresh highs. So if we come to the daily, as soon as this bounced this trend line, it was completely expected to come up and complete the cup, which it did. And then we kind of went sideways while the traders figured out what to do. We had a gap down on Thursday, and then they bought like crazy for the breakout. And that took the Russell a little bit higher than what I expected. And like I said, I'm not terribly surprised because of the bullishness of the other 3 indices. We did expect the Russell to come up and tag the backside of this trend line and probably run sideways into this level for expiration. The breakout in the NASDAQ pushed it a little higher to its horizontal resistance level. It's right here. And now that it's here, we're going to have to wait and see if it wants to push a little higher. If it doesn't, I would expect us to run sideways into expiration, and I would say this circle's pretty good. If it does, we're likely to close a little bit higher. Probably going to run up to this level here at 1165. Now, I'm still thinking the Russell is not going to make new highs. It's going to roll over somewhere between 1165 and new highs, possibly even here, but it looks like the SPX wants to push a little bit higher. If it does, it very well may push this up into this range, in which case it has no resistance till 1165. So that's probably the most likely top, and by then everything should be ready to reset, and we still may come into this circle, but it may be a little bit later. Still expecting this trend line to not hold. I would expect us to run back and, like I said, run into this wide sideways range from 1075 to 1185, which is a very, very wide range. Hopefully, I was hoping we could maybe keep that on the lower end or whatever, but right now it is still continued to be a wide range sideways market, possibly a little bit higher. I would not expect new highs out of the Russell. We may see new highs out of the SPX, but not the Russell. So moving on to our trades. Let's start with the March Bearish Butterfly for a change. So this trade here, it was obviously doing very well last week, and with this very, very strong up move that we had, what I did on Thursday, now Thursday I was skiing, so this was an automatic order. So let's go back to Thursday afternoon. Let's go back to Thursday morning. So here we are Thursday morning, it's up 1100, and it's starting to get stressed out from the upside because we've had a pretty big bounce by now earlier in the week. And this is what our position looked like here. I was looking at a delta theta ratio problem before I hit my add point at 1140 because I'm still $7 from there and I practically have that issue now. And I knew that was going to happen. So I had an automatic order in to buy 1140s because I knew I was going to roll these 1100s to 1120 if I did actually add. So I had an automatic order in for the 1140s at a price I was willing to pay for them, and that hit late Thursday afternoon, and by the end of the day, I was in two butterflies 40 points apart. You can see up here I added in the 1140s, and the position looked like this. Now, the interesting thing is I could keep this and turn this into a rock trade. It would be pretty cool because I do things like that sometimes in the accounts that aren't tracked, but we are following bearish butterfly guidelines. So Thursday morning, around 11 o'clock, I sold off these 1100s. I bought the 1120s. And by the end of the day on Friday, this position had the 1120s and 1140s. So I made the roll. I just made it a little differently because I did it automatically. And I wouldn't want to try to do a roll automatically, but it's a good opportunity to get into some butterflies when the market's screaming up like that. They're usually relatively cheap. Allowed me to be at pretty much zero profit and loss for the end of the day, despite this really, really huge move. So that worked out fairly well. And right now we have our next add point at 1160. We might have a roll point prior to that. I would tend to want to hold off on any rolls from here until we see some sort of reaction off of this 1165 area. However, like I said, we'll just follow the guidelines when we get there. So that is the bearish butterfly trade for March. The rock trade and the M3 were both closed today, mainly because they weren't in great shape, and I'm going to be doing the workshop next week, and I don't really have the desire to watch the positions. So if we go back to Monday, I will show you the M3 trade for February. So we looked something like this. Really, really nice looking trade. My gamma trend was all goofy, but not that concerned about it because we're kind of in the middle of the tent. Maybe I should have been more concerned about it because the bounce was so hard, but I was not. So on this trade here, what we did is on Monday, towards the end of the day, the market was creeping up. I did 10 verticals at, let's see here. Okay, so I did this earlier. This is after the adjustment. I did 10, 1100, 1120 verticals. So coming into the week, I had my shorts at 1110. Obviously, if I have a gamma trend problem now or a delta problem, I definitely had it on Monday after the price kind of sat a little bit and didn't come down. So we rolled the 1110s to 1120, kind of straightened our delta out, and looks like that. So on, let's see, what's the next day? On Tuesday, 10, 11, 20, 11, 30s. And because we went up 11 points, and even after that adjustment, look, we're still, what time did that happen? That happened on, either way, we ended up Tuesday here, a little too negative delta. Position looks like this. And we're within our capital limits, and everything's looking fine. Coming in Wednesday, thinking the market's probably had a pretty big run and it's probably going to settle down a little bit. Just only up a little bit of money. Added 5 more. Well, actually, okay, yeah. So I actually did that on Wednesday. I did the 5 on Wednesday. I was the 12th. I have my my dates and my number dates and my day dates a little mixed up. So we did the 5 there, 1130, 1140. Brought our delta down to 63. Position looks like this. Thursday, I basically went skiing and didn't do anything to this position. And realistically, if I was home during the day Thursday, I could have hedged off the losses a little bit, but it really wasn't that bad. So if we come to the end of Thursday, we did draw down some, but it wasn't terrible. We had a pretty good volatility drop. And it's positive $800. And then this Friday morning, I came in here, I widened this out a little bit and just exited. So Friday I exited the trade. I was totally out. Let's see, right before we exited was 1300. So let's go to 1230. All right, I had exited part of the trade earlier. I just pulled off the verticals in here, and of course, as soon as the market stopped really moving up very much, a lot of profit came back in. Was able to pull. That's what it looked like right before exit, the total exit. Like I said, I pulled half of the condors off when the market pulled back a little bit because I knew I had to exit. I was hoping the market would stay here a little longer and I could get a little bit more money, but the market, or maybe come back a little bit more, but market had none of that. So end of day, that was exited, and that was for a gain of 1623, which is a pretty small gain for an M3, but it's positive, and it was a tough month this month. We had, if you're looking at the charts here, we rode down 100 points and up 50, so that's a pretty big whipsaw there. And let's see, if we go to February rock trade, this had remember we were in very similar positions here. The rock trade was in an M3R. It reacted a little bit better to the upside, and that's because it had those upper butterflies in there. And the February rock trade, I ended up closing that as well. We had adjustments on the 10th. We had 5 1100, 1120 verticals. On the 11th, we had 5 1100, 1130 verticals. On the 12th, which is, I guess, Wednesday, we had another 5 1120, 1130 verticals. And that was it. I didn't do anything Thursday because, like I said, I was away. And by Friday morning, we closed this out. I'll show you what we looked like prior to closing it out on Friday morning, 10 o'clock. And here's where we were sitting. It's not that bad of a position, but definitely outside the tent from Thursday. And I was able to close this out a little bit later in the day. On the pullback, I just shut it down. And that was for, let's see what that came out. So it was a little bit better than the M3, but not a ton better. About 21.48, which is also a small gain from the rock trade. So this month overall, I'm still open on the V Condor, but that is just waiting to expire. So if I take a look at this, it's not going to be a banner month for that one either. We should expire this at a profit of about, let's see, about $1,940. So if that does actually expire at $1,940, then we should be looking at a profit between the trades for the month of around 12%, which is a little bit better than, well, that's an average profit of 12%, which is a little bit better than last month, which was an average profit of 10. Here, I'll show you guys. Last month we had 12.1 on the Bearish Butterfly, 5.8 in the M3, 12.7 on the Rock, and 10.3 on the V, for an average, assuming these are all equal, and they are, of 10.2%. This month here we have 26.4 on the Bearish Butterfly, so that carried most of our profits this month. We had a very small win on the M3, 3.2, small win, 4.3 on the Rock trade, and we are going to close the V trade at about 4%, so that should bring us to about 12.5 on average, which is okay. It's not wonderful, but it's good compared. I mean, in the current market conditions, it's very good. So that's good. And of course, we've already lost our March V Condor minus 5.5%. We'll see how the rest of the ones do in March. We should be able to make that up easy enough. So that is that's what we have. So that's the trades, and that's what I was thinking in the market, possibly a little bit higher. From there, we are in a wide sideways range is the most likely movements. So I hope to see you guys in New York City if you make it. And otherwise, we'll have the webinar as usual the following Monday. So have an awesome week, everybody. And we'll see you in the webinar on February 24th. Good night.